And we are live. Good morning, America. Good morning, world. How are you, Bruce?
Good morning, David. We are live coming to you
That's
in across Texas, Houston, Austin, Louisiana, a few other places, as well as streaming live on LinkedIn, CryptoKick, YouTube. Where else? My X account, Networks Manager. Of course, I'm Networks Manager. David is Sir David Porter.
yes,
We
sir.
are Money in the Morning. Thanks for joining us, guys. Again, crazy times. This is why we're doing this show. This is why we put these things together to help people out in these challenging times. These are confusing times. And let's face it, we're live on Smart Money Culture TV. Guys, we have lots of opportunity during this time when things are going so crazy for people to be able to take advantage of things. So make sure you check out that smartmoneyculture.tv, Smart Money Culture TV network. Actually, it's Smart Money Culture TV network before I mess up that URL. Yeah, Smart Money Culture TV. I was right. Okay. So we had a lot of different things happening last night. Of course, and over the last day, we spoke a little bit on the earthquakes that happened. Lots of earthquakes. Now, if you watch the Simpsons are kind of funny, right? Because a lot of times they'll predict what has happened or what's going to happen. And if you watch The Simpsons, David, they say that there's an earthquake machine. Do you think there's an earthquake machine?
Yeah, of course. I think that's declassified information at this point.
They say there's the lizard people. They're living under the ground, and there's an earthquake machine, guys. That's what
Yeah, I
the
mean,
that's
all that stuff is good, but yeah, of course, it's possible. We pump those frequencies through the channels, and then there you go.
well, that's actually a pretty good point, right? Is that if we are using frequencies, right? Because vibration is one way that you can do these things. There, that's a really good point, David.
Yep.
Probably maybe even has more validity than the Simpsons. I don't know.
I mean, The Simpsons, they obviously have some geniuses and they have a lot of influence. And honestly, the show is hilarious. I love The Simpsons. So,
Well, it is really it's an interesting show, and like I said, it has predicted a lot of stuff, like a lot of stuff, and so you gotta okay, all right, let's see. So I gotta talk. Fly just messaged me here, Mr. Fly Mackey. Can I don't know if I'd like to play the clip from The Simpsons. But I want to make sure that we don't get in trouble. So I just asked him if I could. Because
oh,
that would
yeah.
be pretty interesting to look at. But anyway, lots of other stuff to talk about. Of course, we have, we had the T bonds, the 1 month T bonds, blew up last night out of nowhere. The yield just went sky high, and then I think went back down, which was pretty interesting because the last time that this happened, they said, "Oh, it's a glitch. It's a glitch." It happened on a no trading point, which of course yesterday was there was no trading, um,
Mhm.
and but then over the next week it followed the same thing.
Oh, wow.
So it will be interesting what we see there. Of course, we'll ask Matt about that as well. We have over in, of course, around the world, we have a lot of different things happening with everything. We're basically full on with the Houthis. Um, let's see here. Okay, we have a crash at Hanada Airport. A Wow, let's see here. 739 people on board plane have been safely evacuated. Wow, that's pretty amazing. Okay, that's near Tokyo. A lot of stuff going on here, and how this affects the markets is interesting because I think to be frank, a lot of the stuff at this point doesn't really affect the market so much because.
Oh, we lost Bruce. Oh no. What happened there? Let's see. We got Dixon backstage. Let's get him on. Good morning.
Morning, David. Yeah, morning, Bruce,
How are
wherever
you?
you are. Yeah,
There he
it's
goes.
been very, tumultuous time, hasn't it? I think Bruce is making his way back. Hello there, Bruce.
Yeah, wrong
I'm
button
just
there.
going to launch forth into
Wrong
Bond,
button.
so I'll let you continue with the
Okay.
roundup of the news.
Okay, cool. Wrong button there. Sorry about that. Technology here. So that's the Tokyo airport crash. Oh, but what I was saying was a lot of the news now isn't even hardly affecting the markets because people are just getting so desensitized to everything. Of course, crypto, huge pump yesterday for Bitcoin. We had Bitcoin pop up over 45, well over 45. Good 6-7% move, which of course kind of plays into the whole T-bond thing or the T-bill thing exploding. What's going on here is, of course, we're in an election year, okay, and so they really want the economy to do okay. They really need the economy to do okay so that they can win elections. You don't win elections on a bad economy, right? I mean, as one guy so famously put it, it's the economy, stupid, right? One of our presidents. It was either Reagan or Bush or somebody or Clinton. I don't remember. But the economy is really important. And so you have the Fed coming out, of course, with some dovish talk. They're going to stop raising rates. And of course, they've been raising rates in order to stop inflation. But of course, that's pretty hard to do when everything is such a mess. So I did get the approval to play this clip. So this is the clip of where the Simpsons talk about the hold on. Let me pause. Okay. Where they talk about the earthquake machine and the people underneath the ground. All right, so I'm gonna share my screen. Watch this first time. Smart Money Culture TV. Smart Money in the morning. The Simpsons have foretold, they have predicted basically every single major event that's happened in the world. These guys, they're plugged in, and there's in Freemasonry, you're supposed to tell what's going to happen before it happens, right? Before you do it, as they say. It's then if you've told them, then it's their fault, I guess, because they didn't heed the warning. So it's pretty interesting stuff. All right, so let me share my screen here. Pretty interesting, like 3-minute clip here, I think. Share screen. Of course, I am Networks Manager.
Well, world, this is it. I always thought you'd die before me. Now as I prepare my soul for an eternity of fire and poking.
Yeah, less chat, more splat, pal.
Hey, Mr. S, I didn't know you bungeed.
I want to live.
No, you're too heavy.
It's a glandular problem. Woo! Orlac. Chud. Mole people.
There is no escape from the fortress of the moles. No, except that.
Ow!
going down. The reptilians. Ooh. Oh, that's pretty crazy. David, what do you think about that?
Yeah, I've always believed that there's definitely a lot of things going on underneath the ground here. Like, of course, we've been digging and digging and building, and even in Turkey, there was an entire build out where they had about 20,000 people able to live under there. So, and wasn't that one of the biggest things we had going on in 2001 when we started to go over into the Middle East? Was they were all underground. How are we gonna get to them? So of course, some people they probably do have some different DNA structures, and I guess we'll see. They keep telling us we're gonna know everything. Just keep calm, right? Don't do anything. Let us operate.
Well, that's what they really want, right? Don't do anything. Just keep calm. It's all gonna be fine. That's their main thing. Which, you know, whenever it's like when they don't want you to know something. Whenever they don't want you to know something, you got to be careful, right? So anyway, pretty interesting stuff with all of the earthquakes. We actually had an earthquake here in DC as well last night. Very small one, but yeah, it's pretty crazy.
What was that? There was an earthquake. There was an earthquake, you said?
Yeah. At like 2 a.m. or something like that, we had an earthquake.
You felt it?
No, of course. I was sleeping. I had to wake up at 5:15 in the morning.
Okay.
Yeah.
Didn't wake you up.
5:15. It's 5:15 in the morning now in Texas and Louisiana. It's 6 a.m. or 6 p.m. in Bangkok. It's 3:15 in Dubai, 11:15 in London. Speaking of London, we have our good friend Mr. Matt Dixon. Matt is the founder of Eve.io ratings and research. We made a bunch of money with these guys back in the day following their AI ratings. You guys should check it out. EVAI.io. Matt, how are you, sir?
I'm good, thank you. Good morning, David. Morning, Bruce, and morning, everybody.
Good morning.
Yeah, it's I don't know about earthquake machines or anything like that, but I do know that there are more earthquakes in the recent years, and they seem to be more and more accelerating. But not just earthquakes, all sorts of natural disasters and disasters of all kinds. So maybe we're working up towards some sort of crescendo. Who knows? Yeah.
What does Fibonacci tell us?
Well, Fibonacci tells us that potentially, we're headed for towards the end of a major super cycle, which is very, very long term. You're talking over hundreds of years. Looking at the really long-term cycles and potentially heading towards the end of that cycle, but it's difficult to know exactly when that end will be. But that end would signal potentially a mega market crash. But we don't plan for that. We don't live for that. We just live for what's immediately in front of us. And we had that bond yield spike, or apparently had that bond yield spike, didn't we, overnight?
It was pretty interesting. I posted it as well. I don't know if I was one of the first guys to see it, but that post got a lot of action. It seemed to go right back down. Pretty interesting because of everything going on. Now, I will say that when I have seen this before, like I said earlier, they said it was just a glitch, and then it actually did go right back to that place over the next
Yeah, I mean, markets are closed basically, so things can happen, glitches can happen. They can be resetting their, their hardware, whatever it might be. There could be some, you just don't know what. But markets are closed, so it had no real effect. But having said that, we'll just see in a moment, there was actually at the same time an opposite move in cryptocurrency, in Bitcoin in particular. But It is interesting whether that spike was real or not. There is, an unusual situation with bond yields at the moment. We touched on this the other day, but basically long-term yields are lower than short-term yields. And you can see that here with the 10-year basically lower than the 2-year. And that's what's called bond inversion. That bond inversion began July last year. And what that normally signals, and it's normally within about 6 months, and we're past that 6-month period now, but it normally signals recession coming. But obviously the Fed and the central banks around the world are doing all they can to avoid recession, to try to get a soft landing. So they've been manipulating the markets. It's a very, very sort of unnatural market at the moment because we had all this printing of money. So there's so much money in the system that even as they withdraw some of that money, and as we can see M2 money supply and everything going down a little bit, there's still the money, the system, is awash with money. So that's why we're still seeing high inflation. This is a normal bond yield curve where you'll see from bottom left to top right.
Hold on. You didn't bring up this chart yet.
Oh, let me put
I see it down below. Oh, there it is.
There you
Okay.
go.
You see it, yeah?
Yes,
Yes, sir.
Yeah. So this is a normal bond yield. Normally, you'll see that the longer term yields are higher than shorter term bond yields, and that's because basically there is more risk lending money over a long period of time, so they have to pay higher interest rates. But when you see, and hopefully you'll be able to see this next chart, maybe it's moving through a little bit slowly, but this is what we have at the moment, which is the inverted bond yield, where you're seeing those short-term rates much higher than the long-term rates. And that was, even though it was probably a fake move over the weekend or last night, with the spike in short-term, this was T-bill yields. But even so, we still see higher short-term yields than long-term. Now, this is a really unusual situation. It means there's no confidence longer term. They think interest rates are going to be lower in the long term, and that's why the bond yields are lower of the long term. So this is that unusual situation that normally 95% of the time signals a coming recession. So let's see.
Yeah, that's yeah. Go ahead.
Yeah. So I'm trying to. Well, anyway, I'll flip through anyway. So this is quite interestingly, we saw the strength of the US dollar spike. It's been spiking a little bit. This was actually, you talk about Fibonacci, it was actually a 1.618 extension of a previous wave. So it was very, very precise. The US dollar index moved down to that level of just over the 100, and it's begun to spike now, 101.62 at the moment, I think, as we speak. So we're seeing a bit of a spike in the US dollar. So we need to try to think, why is it that the US dollar will be strengthening? Now, if money did come in, it's just really strange. We saw bond yields basically spiking, which means treasuries are going down. These short-term treasuries, the price of the treasuries is going down. So we have to think why that would be. And it could be that, there is a bit of a loss of confidence in the market. It may be that, there are many possible reasons, but it still looks to me as though recession is on its way, and the US are just caught between a rock and a hard place. That they want to raise, they want to lower rates, but they can't afford to lower rates because the economy is still reasonably strong, and inflation is still, way above, almost twice what their target is. So they really are between a rock and a hard place. So I don't know quite what's going to happen, but it does seem that we're heading towards some sort of crisis moment. The problem is we genuinely can't tell from these charts when it's going to be. But I do think we have to prepare. And that's where we talked about DCA, dollar cost average, looking at diversifying into different assets. And treasuries are probably a great place to be longer term, US treasuries, because basically if interest rates do need to come down to try to stimulate an economy, if we head into recession, interest rates will come down. As interest rates come down, then bond prices go up. And so bonds are this is now probably a really good place to start getting into bonds. So DCA into bonds, that would be a good bit of diversification. Again, don't put all your eggs in one basket, but there's all sorts we can go through. I was going to actually talk about Solana today, but just because we've had, this little crazy spike on bonds, I thought it'd be quite interesting to look at that.
Yeah, agreed. People are going to be watching it pretty closely, especially with, like you said, everything that's going on here. We have literally printed up so much money. And when I say printed up, it's not just, the paper cash that they print up. About 90% of the US dollars actually are already digital. So, a lot of people say, oh my gosh, I don't want to be in digital money, CBDC, this and that and the other. And, understand that your money's already digital. Almost, you have automatic deposit, right? You put your money in the bank. What do you think happens when you put your money in the bank? It goes digital. It's digital. And so 90% of the dollars are digital. So when we say print, they're printing it, like that.
Yeah. I mean, what's interesting, we've said, haven't we? We've been discussing about potentially Bitcoin becoming a safe haven, that digital gold. And just look what happened to Bitcoin overnight. So whether that bond spike was real or not, it actually coincided precisely. I didn't show it, but I've got a chart showing the exact opposite move where you got that bond yield spike in exactly the same time. So bond yield spike, that means bond price going down. And at the very same time, you got Bitcoin rocketing, not just Bitcoin, across the crypto world, prices rocketing. And so, yeah, it's at least a coincidence, isn't it? That you see.
Yeah, I mean, you got it. Absolutely. These people, you got to realize, folks, that, even if you're trading or something like that, there's a lot of people that are really in the know. And they probably, they might know a little bit more than you. And so if you look as well, just kind of across the wire now, they're saying that a step forward on the new ETF being approved. So the ETF is going to be the way that most people are going to experience Bitcoin. They're going to have Bitcoin. The financial institution is going to hold the Bitcoin. They're going to sell it to you in your portfolio, in your holdings, and they're going to say that you hold it. You're going to hold a derivative of it. And that's one of the reasons why I always talk about Bitcoin being so important. Bitcoin, Litecoin, Global Boost, and some of the other ones that are impossible to seize, freeze, or take by court order, these decentralized blockchains, because they are so valuable and they're so powerful that states aren't able to do what they want. They're not able to turn them off. And so that's why they really push for this. But yeah, pretty interesting.
Yeah, I don't know if you can see that, Bruce. Can you see my chart there?
Yes.
Yeah, it goes.
Yeah, I mean, that was just, I wanted to just show people, Bitcoin is on the lower chart here. You can see Bitcoin, that massive spike. This is a 4-hour chart. Each of these candles is 4 hours. And you can see the massive spike in Bitcoin price there, which, smashed through overhead resistance, which was around this sort of level, absolutely blasted through. But at the same time, you saw this, the price of the US T-bill falling.
Yep.
So we got the T-bill yield rising, and you get the inverse of the T-bill itself, the price of the T-bill falling there. So whether that's a fake move or not, we saw the actual response apparently to that with Bitcoin price here, which, as I say, absolutely rocketed. I mean, we're talking from this sort of level, 41,000 to 45,000 ish. So we're talking 8% there in one night.
Yeah. It was a massive move, and you're right, probably response. And the news with the ETFs is always kind of funny because it's very I don't know what's the word I want, but they just feed out a little bit of news and, oh yeah, hey. And so they could really want to feed into the pump as well. Just, okay, we have a nice pump going. Let's keep that going and put some news out there. Yeah. So basically
let's see, Bruce, this could be this, they say buy the rumor, sell the news, and we're heading towards the CTF decision probably on the 10th of January. So we're just a few days away now, and it could be this final real pump we get in cryptos where they're basically buying that rumor. And so often when the news actually comes out, because everyone's positioned, even institutions are positioned as much as they can.
Yep.
But certainly retail are positioned, all expecting this, and they will stay positioned. But then when the news actually comes out, then you'll probably see a sell-off in the market because everyone needs to take profit at some time. And they've made their profits. The cryptos really rallied a lot just recently. And I think there'll be a shock move. Personally, I believe there'll probably be a shock move in the opposite direction once that news hits the wires.
I mean, it would make sense. It's real tricky though, right? It's always, I always say it's easier to buy than sell. It's one of those things because it could go the other way. I mean, it's possible that it turns.
As you say, selling is actually a dangerous thing, short selling, because you've effectively got infinite loss potentially. So theoretically infinite loss, whereas if you're buying, your loss is limited to at least what you've invested. But going short, you can, potentially lose more than you've invested. So, shorting is dangerous, but we can still just, at least if people are long in the market, they can at least potentially take profit. So if it is buy the rumor, sell the news before the news comes out, or just as the news comes out, you can potentially just collect your profits and be happy.
Well, that's a really good point. And there's one thing, guys, that I will say about Matt. Matt and I have known each other for a while now, and when you're trading, you want to win. You want to win the trades, and sometimes it's you have to look at it and say, okay, what's the upside and what's the downside? And I have less downside here, or there's no downside if I sell or if I take profit, and maybe that's what you take. So keep that in mind as you move forward. If you're doing that, I don't think it is either, as long as you're holding for the long term. I don't think it's a bad move to just hold. I think it will probably go up, but we could have this point in between, of course, where we go down. Of course, historically, when tax day hits as well, people have to sell off their positions in order to pay their taxes. And so leading up to tax day, that is normally a going down. But we're in a position where tax day and the halving of Bitcoin almost coincide.
Yeah.
So that's interesting too. Of course, in the halving, of course, now I think we're at what, like seven Bitcoins or something now per block every 10 minutes. We're going to go down to 3. Is that right? Or 3 something?
So we came from 50 to 25 to 12.5 to 6.25, where we're at now. So it'll go down to 3.125. So 3 1/8. So yeah. So
this is a major supply squeeze.
Yes.
Yeah, definitely. So probably the price of Bitcoin will need to go up at some point to compensate miners to validate those blocks, to do what they need to do. It's very energy intensive, as we said yesterday, particularly with Bitcoin. So they need to earn their money. So Bitcoin price will probably go up, maybe not immediately. Again, we've got all these dynamics of buy the rumor, sell the news. The timing of when something happens, how long will the delay be before it hits the market? And it doesn't happen when you expect. And that's just the way markets work. They're there to try to catch you out. You're trading actually against the market, like the market is a living entity itself. You're trading against it. It's trying to catch you out. So you need to think about what is the market actually going to do. And it usually does the opposite of what you think, because it's there to catch the most people out, isn't it?
Well, that's exactly right. You have, and we talked about it a number of times, you have different exchanges that are, and people working on the exchanges that are, it's sometimes in their best interest to do things. So to make sure that, you know, if you're going to make $1 million by liquidating a bunch of longs, then sometimes it'll turn the other way. And if everybody's short, then of course it makes sense to go long and move the price up, which of course could be what we saw today. But I think it does seem very suspect that the two charts, as you showed, were like that, and that as well, T-bonds, the yield will go up as inflation goes up. That is a direct correlation. So that's why I posted last night. I said it will be interesting to see what the Fed does, because we'll see. But they may,
Absolutely.
and of course they're trying to be dovish.
Yeah, all eyes on the Fed. So that's really going to be very important for us to just keep an eye on what's happening, not just what they do, but what they say. You know, when you have these press conferences and Jerome Powell's there speaking, and you know every single word he says potentially turns the market. So very, very important, the questions that are asked, how they answer them. So yeah, it's just expectations, not necessarily actual facts, but just expectations can move the market in such a big way.
Yes.
And
go ahead.
No, there's I can see there's the spike. Yeah, the yield spike. It doesn't look natural, does it? It doesn't look right. It probably was a glitch, but even so, it's whether that was the cause of the crypto pump, I don't know. But certainly crypto is interesting, and I think it's really good that we look at value for money with crypto, which ones are best. And I'd like to, if you're okay with it, we'll take a look at Solana perhaps tomorrow, because we've seen Solana do 10x recently. We mentioned that, didn't we? And it's an amazing network. In terms of potential returns, it's one of the best tokens out there, both for upside and downside potentially. So you know, obviously you got to use your risk reward and use your trading skills and try to avoid those losses. But it's a good one to look at, and look at some of the technicals behind it as well.
Yeah, I love it. Let's do it. And I think, like you said, they're building out such a great ecosystem. I know in New York there's just a budding community. So yeah, let's dig into that tomorrow. That'll be great. And make sure you follow MD Trade at MD Trade on X. That's Matt Dixon. He's charting with us every morning on Money in the Morning. Thanks so much for coming on, Matt.
Thank you. Thanks, David.
Thank you,
thanks,
Matt.
Bruce, and thanks everybody. Catch you tomorrow.
Yes.
Enjoy the day.
Great day.
Cheers. So what a wow, interesting, right? Just a interesting turn of events, I would say. Of course, with the crypto pumping, it's always fun, right? It's always fun. At this point in my career, I like it when it goes up, and I also like it when it goes down, which is kind of funny, but it's true. It's fun to watch it, and of course, it's the same with our global boost that we started quite a bit ago here, but to celebrate our Bitcoin pump,
0.
my favorite video. This is us going down, down, down. This was my life over the last year, guys. And finally, I'm contemplating life. What am I doing? My wife wants to go. Talking to the divorce lawyers. Goodbye. Do I hold?
Don't you know, pump it up. You got to pump it up. Don't you know, pump it up. You got to pump it up. Don't you know, pump it up. You got to pump it up. Don't you know, pump it up. You got to pump it up. Don't you know, pump it up. You got to pump it up. to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you?
It's great.
It's still good. It's still good. I did that last time too, didn't I? Boom, 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 boom. Sorry about that. Here we go. The rest.
Bring it back.
Hey guys, one of the main reasons that crypto is pumping is because they're printing so much money. They're printing money out of control. We basically have a situation in Washington, which of course I'm a Washingtonian here. I know we're live in Texas and Louisiana, and actually, I guess starting over the next few days, we're going to really have a reach out. I want to talk to everybody everywhere. I know David does as well. So we'll put that together. But, here in Washington, that we've gotten to a point where the tax that we have, the tax that they take in, the federal income tax, is not taken to pay anything. It's just basically the burn. So in crypto, we have something a lot of times that they'll use. It's called the burn. And they'll bring in some of the supply, or they'll buy back some of the supply, and then they'll send those digital coins to an address where they could never be used again, and it's called the burn. And so we burn the coins, and that in effect limits the supply, and it gets talks like we talk about with the supply squeeze, and they're producing less bitcoins and stuff like that. So that has the effect of being similar, and that's basically all the federal income tax is the burn, because we have a system now where they just print whatever they want. So and the central bank is actually in control of that. The Congress works really for the central bank. Central bank is the one calling all the shots. You don't know who runs it. It's a private bank, the Federal Reserve. You don't know who that is. And the central banks have taken and been basically usurped or bypassed the governments around the world. And they're the ones really in control of the money supply. And if you control the purse strings, then you control mostly everything. And so that's why we can't get anything done here in Congress. But yeah, the federal income tax is just the burn. They take it in order to again take the supply of the money out of circulation, just like raising the rates does. That'll take the supply out of circulation, and so will collecting income taxes. So they collect those income taxes, and again, it's just the burn. That money isn't really quote unquote reallocated or anything. Everything is just printed. So we have I would say it's a dysfunctional system that we have. I'm certainly not working so well for your US dollars. Now, as Matt pointed out, the dollar is on an upward trend, but it's really on an upward trend if you're comparing it to other currencies. Because if you're comparing it to commodities, if you're comparing it to Bitcoin, if you're comparing it to Global Boost or Litecoin or any of these, it's on a very much a decline. And so, yeah, okay, we're gaining on the pound and we're gaining on the euro possibly, but overall, your buying power with the dollar is declining, and of course that makes sense because we're diluting ourselves. We're diluting the money that we have. I shouldn't even say ourselves, because they're doing it to us. The central bank is diluting us in order to pay for all of these wars and different things that they want to pay for. So that's it will be interesting, and I'll tell you this: we'll never pay off the national debt. The way that works is, the US dollars, these paper bills that we all use, are lent to us. So they lend us these paper dollars. Attached to every dollar that they lend you to use is a debt. And so every dollar that is printed, every dollar that you use actually comes with debt attached to it. So there's no way that we'll ever pay off the national debt if we continue with the central banking system. It is impossible. It's impossible. And that's what you see, of course, with our friend there in Argentina. he's closing the central banks, which is pretty interesting, as well. It's like it's pretty crazy. So actually, I'm going to play this again. I know I played it the other day, but I feel like the central bank is pretty important here. So I'm going to play this. I'm going to share my screen again here, and this is talking about what the central bank is. The central bank is running our countries. It is running. This is who we're working for. Every dollar that you get is borrowed from the central bank, and there's no reason for it other than we've basically been conned into letting the central bank run everything. There's no reason you need to borrow your money to have your money. You work, you earn, you have value. Then why do you need to borrow it to use it? You don't. And that's where I am beating the drums every day, and David beating the drums every day, Matt Dixon and everybody else, that you need to move yourselves into other things, commodities, Bitcoin, Litecoin, gold, Global Boost, different types of commodities that aren't being used like this. So here I'm going to play. This is about 6 minutes, but it's about the central.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions. For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%, resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of a small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24th, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed actually contracted it, fueling one of the largest depressions in history.
Yes. So, we've been conned.
Naturally.
We've been conned into this central banking system. And there has never been a time when information was available like it is right now.
Exactly.
Information right now is available thanks to guys like Elon Musk and guys like us who are willing to go out there and tell you the truth, tell you what's going on. Information is readily available. And this is why I do think that we are in a point where things can change. We've been going around the world, David and I, talking about the monetary revolution for over a decade now. The monetary revolution. We have a monetary revolution. And that is that's where we're at. We're able to take the money. We're able to take the power back from these people. And the more people that we wake up and the more people that understand, the better off we are. Because most of us don't want these endless wars. I mean, since Vietnam, we have basically, the U.S. has been in conflict the whole time. We've had one conflict or the other. And yet, these are big money-making deals. They're big money makers. War is highly profitable, very profitable business. It stinks, it really does. But it is profitable business. And even now, the economy is being stimulated by this influx of money into the so-called defense sector, which is really offense sector. One of the things that, of course, we did years ago, 10 years ago, was we started Global Boost. Global Boost, in our Genesis block, we talked about BRICS. What came out yesterday, David? BRICS. They talked about BRICS. They said 4 or 5 more nations joined BRICS. I'm going to bring up my post again here from it. BRICS. And now, because I talked about BRICS, we talked about BRICS on our first show, David. And what did we say? We said, well, we had Joshua Hawley, our good friend Joshua Hawley, on here. And he says, compared to the GDP of everything else that's going on, it's very small. But what happened yesterday, the UAE, Saudi Arabia, Ethiopia, Egypt, and Iran just became members of BRICS. And BRICS is this new, 10 years ago, right? You can actually see it lower. We put it in BRICS nations to create a 100 billion development bank. And so that was 10 years ago. We put it in our Genesis block. We were talking about it 10 years ago because we saw that this was going to unseat. This was going to have an effect on your dollars. This was going to have an effect on what's happening in the world and the de-dollarization, because the rest of the world doesn't want to be the dollar to be king. They don't, they don't like a lot of the stuff that we do and we're able to do. So now with Brazil, Russia, India, China, and South Africa, BRICS is shaping up to be a major factor. It's no longer very small. It's representing 29% of the global GDP and 43% of all of the oil production. That's massive. It's massive. And so what starts to happen when you have that much power, of course, is you can control things, right? And if people get out of the dollar and they start using BRICS as a new currency, this de-dollarization could be something else as well. Some of these countries here, they have political disagreements, but you see them standing all here together. China, India, there's a lot going on there, as well as some of these other ones. And then if you look a little closer, 10 years ago, my father, brothers, some vets, some U.S. military vets, cryptographers, and myself launched the world's first Patriot blockchain to save freedom-loving people from the impending de-dollarization and collapse of fiat money. In the Global Boost Genesis block, we cited BRICS.
Interesting.
It's historic. And, guys, we're Americans, right? So, we have to be really careful. And we did things the right way. It's a proof of work chain. Global Boost. Check it out. globalboo.st up in the URL. Global Boost with the dot between the O and the ST. Get involved. We have a lot coming out this year. Unstoppable, unseizable, we can't do anything. It's a decentralized cryptocurrency. You can't seize it. You can't freeze it. You can't stop it. You can remember your seed phrase in your head, and there's nothing to take. Amazon, I posted this yesterday as well. I'm going to share this. Oh, wrong one here. I'm going to share this as well. This is Jeff Bezos, of course, Amazon. Microsoft took 10 years in order to really take off. And as well, Amazon was the same. And if you look here, so I said blockchain is the internet of 1997. Guys, you don't want to miss this boat. Blockchain is the internet of 1997. Amazon took 10 years to really take off. Global Boost is in our 10th year with the sensor-resistant Boosty, BSTY, Bitcoin-based chain. Impossible to counterfeit, freeze, seize, or stop. Do you own any Boosty yet? Here's a 1-minute clip here. They ask Jeff Bezos, and he talks about this massive growth of the internet.
Hi there, who are you?
I'm Jeff Bezos.
And what is your claim to fame?
I'm the founder of Amazon.com.
Where did you get an idea for Amazon.com?
Well, 3 years ago, I was in New York City working for a quantitative hedge fund when I came across the startling statistic that web usage was growing at 2,300% a year. So I decided I would try and find a business plan that made sense in the context of that growth. and I picked books as the first best product to sell online, which making a list of like 20 different products that you might be able to sell. And books were great as the first best because books are incredibly unusual in one respect, and that is that there are more items in the book category than there are items in any other category by far. Music is number 2. There are about 200,000 active music CDs at any given time. But in the book space, there are more than 3 million different books worldwide active and in print at any given time across all languages, more than 1.5 million in English alone. So when you have that many items, you can literally build a store online that couldn't exist any other way. And that's important right now because the web is still an infant technology. Basically right now, if you can do things using a more traditional method, you probably should do them using the more traditional method.
Yep.
The great Jeff Bezos, the world's richest man, I think. I mean, talk about a transformation, right? I mean, he was a pretty nerdy looking guy. You see him now, he's all, I mean, he's on some good stuff, I think, right?
It looks like he does a bench press.
He looks like he does a few bench presses. That's for sure. But, you know, guys, having the foresight, crypto, blockchain, if you look at it, it is growing at the same rate. And, you know, if you bought Amazon way back when, it was really something else. You did really, really well. Now, you got to be careful because, of course, if you bought Enron, then you didn't do really well, right? Enron, what a disaster that was. And that's what we're going to talk about. You heard Matt. We're going to talk about Solana tomorrow. That's pretty exciting. It's pretty exciting what they have going on here. I think that it's really important to have some exposure to these types of things. We also, as we move forward this week and in our future shows, we're going to talk about how to onboard easily, how to buy cryptos easily, and you know, and do these things so that you can have some exposure to them. Because I think that it's important. It's important. I think that they really have no choice. We're at a point in the history of our fiat money and the central bank that they have no choice but to print more money. No choice. The only way out is to print more money. And your wages are not going to go along with this fast printing of money. And if you're sitting on a lot of US dollars, well, you're going to be diluted to oblivion. If there's $1 trillion in the world and you have 5 million of it, and the central bank prints up 4 trillion more, and now there's 5 trillion instead of 1 trillion US dollars out there, and your 5 million just got diluted the same amount. So that's what everybody needs to understand. And when you talk about blockchains like Bitcoin, Litecoin, Global Boost, and some of these other ones that are, you can't change the number. You can't change the final amount. You can't inflate them. That's what's really important. And even if they fork it or they do something else to it, that old chain is still going to go. People are still, Bitcoin is always going to be Bitcoin. Litecoin is always going to be Litecoin. Global Boost is always going to be Global Boost. We kind of found that out the hard way.
That's right.
Thanks for tuning in, guys. It has been an absolute pleasure. Again, an honor and a pleasure. Goodbye in Texas and Louisiana. We'll see you guys again tomorrow morning at 5 a.m., 6 p.m. in Bangkok, 6 a.m. on the East Coast of the U.S., 11 a.m. in London, 3 p.m. in Dubai.
Fantastic. Thank you, Bruce. We'll see you tomorrow.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.